All right, guys. So we'll give it a few more minutes just to get a few more individuals on call before we start. I'm not going to take too much of your times today. I know it's Cinco de Mayo, so I know most of you guys are, wanting to learn Forex, but still wanting to celebrate a little bit. Where we at? Let's see. Right. Let me give it a couple more minutes. We'll start at 8:10 exactly. Is everyone having a good weekend so far?
Yeah, it'd be better if I wasn't at work, but it's all good.
Trust me, bro. Give it a few months. Give it a few months. You will be out of there.
I'm gonna hold you to that, and I'm gonna hold myself to that.
Yeah.
So, am I the only one on the call?
There's a few other individuals. I know. We get a little nervous when it comes to talking in front of the group.
Hold on.
All right. Okay, we got 20 participants so far. Looking good. So today, guys, we're gonna talk about Fibonacci, do a little bit of back testing. I'm gonna keep it short, sweet. I'm not gonna do too much of overloading on information. I really just want to talk about Fibonacci and specifically, just because it's a tool that's very powerful when you know how to use it, and it's important that we all know how to use it, especially when it comes to actively trading. Also looking for positions that we may want to take in the future. Fibonacci comes in handy when it comes to that. So let's see what time we got. We got 8:09. We're gonna start here in 1 minute. All right, so let's go ahead and get started, guys. I hope you guys are all having a great weekend so far. We're coming to an end, but that doesn't mean it's a bad thing. That only means we're coming to a solid week of trading. For those of you that are beginners, welcome to the fields. We're all fighting the same battle, to make this paper, gain these pips, and ultimately to be able to leave our 9 to 5 lives that we're living right now. And if you currently are out of that 9 to 5 cycle, we're all coming to join you. We're fighting that battle, and we're all coming front side to fight this war with you. But today, like I mentioned before, we're going to talk about Fibonacci retracement. Fibonacci, a tool, is big. Fibonacci is a tool used in the Forex market to predict future movements, whether that's in an uptrend, a downtrend, or even breakouts of consolidation. Fibonacci can be used to determine where an entry point should be made, as well as to predict if the trend is strong, if the trend is normal, or if the trend is weak. When the trend is weak, you can anticipate some type of change in direction. If the trend is strong, you can anticipate, the trend to continue in that direction. Now, when using this tool, you don't want to use it by itself, because by itself, Fibonacci isn't always 100% correct. You may assume that the price is going to stop at a specific level, but it may go past that level to the next level. So you always want to use Fibonacci in conjunction with other indicators, other confluences, such as trend lines, such as key levels. Key levels is something that we discussed in some of the past videos. Trend lines, as you can see here, this yellow line going down being a trend line. You can also use it in conjunction with breakouts of consolidations or breakouts of uptrends. Being able to use Fibonacci in conjunction with those other tools and finding confluences, whether it's 2 pieces of confluence, 3 pieces of confluence, 4, 5, 6 pieces of confluence, is always going to give you a better grasp of the direction that the trend is going and if it's going to continue to move in that direction. All right. If you guys do have questions while we're going along, please go ahead and drop them in the chat. And as I progress along, I will stop and answer those questions. So as we're looking here, this was a trade that I took last week. I think I took this trade twice, GBP, JPY, and it was right in this area right here. Now, as you can see, when you look at it from a larger scale, you're seeing a lot of things on the chart. So let's kind of just go over what do we see on the charts right now, because there's a lot of different colors, a lot of different shapes and things along the lines of that you may see on the chart. So starting from the top, you see this lime green line, which says weekly with an asterisk. The reason why I have this weekly with an asterisk is because this is a key level. All right, what a key level is as you may know, is when price comes to a point, it comes back down, it comes back to a point, comes back down, so it's acting as an area of resistance, and then price breaks above it, taps it, goes back above it, taps it, and continues to go to the upside, which then that same area becomes an area of support. Now, keep in mind, this line is just one line at a specific price point, 149 flat, right? So that's a psychological line. But if you take a square and you kind of hover around the area, this creates what is known as a resistance or key level area. So it's not exactly one line, it's more of an area. So you're looking at the wicks coming into that area, you're looking at how price reacted in that area, and just kind of draw that area out to understand. Hearing a lot of feedback right now. So let it be. All right, so that's a key level, and then I had some other levels. This one is not listed, but this magenta one right here is a daily level. All right. Hey Jay, do you mind? Yeah, I can mute you. Don't worry about it. We should be good. So this magenta line, this is an area of support or resistance, right? So if I go back in time and I kind of look at that area, it was support. Now it's acting as resistance, right? Resistance, support, right at that line there. So that's a key level for me. So I can actually go ahead and label that. So let's go ahead and do so. All right. So we're going to label that area. Now, this blue line here that you're seeing, this is more of a 4-hour level, right? So I went to my line chart to find that area, and I just saw this area where price consolidated and turned. It either consolidated and turned, or came up, tapped that, or came down, tapped it. But this area right here, to me, was very, very strong. There was just a lot of reaction in this area here. So I went ahead and marked, the chart as an area of support and resistance, key level on the 4-hour time frame. So after I had that level, ultimately I saw this taking place. So if we go back into March of 2019, we started to see price doing what? We saw price come up here, then we saw price dip down here into this green area. This was like an area of support. The reason why it's support is because price came down here and it shot up. Now, if you look at this, price shot up about 460 pips within the 7-day period, right? From that area to up here. And then price tapped this area, right? And it came back down another 400 pips. And then what happened? Price came from this area back up another 400 to 500 pips, right? So we knew that this area was definitely a solid area of support because price wasn't really falling back down. So if we could predict if price came back down here that it will go back up simply because we had one reaction, two reaction, then we saw this happen. Boom, it never came too far down, and then it shot back up. So moving forward, we can predict, upward movements whenever price comes down to this daily key level, right? So we knew that, but I wasn't trading any of this here. I saw this around this area here, okay? That was from last week's movements. Now, when it got to this area, I didn't just look at this area, right? I had to go back and actually look at an overall picture of the market to see what was going on. So from a weekly standpoint, we saw what was happening. We wanted to look at, okay, what is really happening with the market? We first know that market is in an uptrend right now, right? From a weekly standpoint, it looks like it's in consolidation. So it's moving sideways. So we could predict some type of downward movement eventually, right, to soon come, unless it's going to come back up to this weekly level, right? But right now, it's looking like price is getting weaker, and if sellers are taking direction or taking control, and we can expect some type of downward movements, right, from a weekly standpoint. Then we look at it daily, right? Daily, we start to see a little bit of uptrending, and then we have this consolidation taking place, and then it's price is starting to get real tight in this area. So now we can expect some type of either upward movement or downward movement, right? Still the same thing. Then we go to our 4 hour. 4 hours is what I like to trade off of simply because price tends to move in the way that it should move. It's not more erratic, or it doesn't just tap an area and then shoot out in one direction, while you were thinking it was going to go one way, it actually went the other way. Price tends to do exactly what it looks like it's going to do on the higher time frames. So I came to the 4 hour, and then I started to see this, right? I'll take this yellow line away. I saw this. I saw, price is up here at one point. Price came down here, and it's just continuously falling, right? So let's change the color of this line to this teal turquoise color because that's a 4 hour. So I saw that taking place, right? So I was like, okay, that's interesting. What else did I see? I saw around this area, price was also uptrending, right? So now I'm looking at some type of triangle in this area here, right? So we want to find price either at the floor of this triangle or at the ceiling of this triangle. Now, yes, it's not a horizontal line being a horizontal resistance. It's a diagonal resistance, but that's still resistance. And this is a diagonal support, so it's still support. Price is respecting that area. So we had these two areas acting as support and resistance. So then I was coming down to my lower time frames to see what price was really doing. And then I started to see this. I saw this consolidation taking place. And if you guys recall, I made a call a couple weeks ago where I gave my stop loss, I gave an entry point, I gave a take profit point, but price came down and then shot up to the upside unexpectedly, right? And then I realized that the reason why price shot up is because I didn't allow price to confirm a direction that it was going in. I anticipated a downward movement off of something like this. I saw this happen, this bearish engulfing, and I immediately said, okay, guys, price is going down. Let's go ahead and take an entry. Let's set the stop loss above the channel, and let's go ahead and take profit somewhere down in this area, right? It wasn't on this pair, it was on a different pair. But what happened was price came down and then shot up immediately to the upside. After looking at it in hindsight, we saw what happened. So by me understanding that, I waited. I remember what I did there, and I remember how I failed there. And I said, you know what, let me wait it out a little bit longer to see exactly what's going to happen. So I waited, and then this happened. Boom, right? And then a little bit more upward motion, right? So now this was when I was like, all right, perfect. Price isn't going to catch me slipping this time. So I saw this right here, right? So as soon as I saw this, price never broke out of this resistance area. This is where I said, you know what? Let me go ahead and use my Fibonacci tool to see what's going to happen. So once I saw this here, and I saw price start to come down to this lower level, that's when I pulled out my Fibonacci tool. So I came here, came to the Fib tool, and I looked at this area, and I drew it down here, and I knew that, okay, the bottom of the channel is at a 382, okay? There's also a 50% area, and then the 61.8 area. 61.8 is at that 4-hour horizontal line that I have drawn, right? So these 3 areas are my key areas. And I'm going to tell you why these are key areas. Because when price is coming in a direction, whether it's going up or it's going down, right? If it retraces to a 38 zone, that means your trend is extremely strong, and it's going to follow in that direction. If price retraces to a 50%, that means it's a normal trend. So it's more than likely going to continue in that direction, but you can anticipate that price is going to eventually become weak. Now, if price were to retrace to 61.8, meaning it's coming back into this channel, that's when I'm more so getting weary of the direction of price. I wouldn't want to take any type of position if I saw price come back to this area. So when I saw that price got bottlenecked at this area here, right? So price came down here, right? And then they like kind of shot up and it was doing its own little thing within this area on the 1 hour. That's when I dropped down to my 30-minute just to see what was taking place, right? So I came down to a 30-minute and I saw that, okay, price is still kind of making its lower highs and lower lows, right? And it's just dropping, right? So came down to a 15-minute just to find my entries. I always use 15 minutes to find entries simply because you're going to see more of candlestick patterns on a 15. And what I saw when price was coming down, because I drew my fibs, you know, this area, and I was also drawing it down here when price came down here. But when it first came down to this area here, and I saw that price, okay, came down to this level, retraced to the 38, I saw this type of pattern here, where it was a bullish and bearish engulfing, an extreme bearish engulfing at that. So once I saw that, that's when I got, you know, I was alert to take a position. So price came down here, then I saw this take place, and basically I took a position, my first position right here. So I set a sell stop right at this level because price came below it. And I was like, okay, I expect price to do some type of retracement to the bottom of this channel, right? And then continue lower. So price tipped up here and then it continued to drop down. And I saw this candlestick forming and I wasn't alarmed. You know, it's just 15 minutes. So I saw this. Of course, you need some type of retracement. So I kept that position. Mind you, it's a small position. So at most, when this retraced against me, I think I was at a loss of $15 at most. Yeah, just about like 15 to $20 at most. 15 to 30, excuse me, at most. When I saw this. So then once I saw that, okay, price is continuing on this downward motion, right? That's when I came back and I took my fib and I drew it from this top wick down to this lower wick right here, right? The reason why I drew that was because that was an impulse move to me because price is going down. As you can see, price came below this channel, retested the channel, and then started to drop. When I saw this retest of the channel, I set another stop limit right down here below price where these lower wicks are. And this was a bigger position. And I was really risking it. The reason why was because I saw this happen. And then remember on the higher time frame, this is a 382 level. That's the reason why there's green bars. So 382 on a higher time frame, and it's coming up to that area and it's wicking down, meaning that sellers are back in control, pushing price down. It's not breaking through that level back into the channel. And then we see this happening right here, wicks from the upside, and then we see price being pushed down. That's when I was like, okay, price is pretty much going to stop at this 382 level. It's not going to go to 50, and it's not going to go up to the 618, which was up here. So let me go ahead and set another entry down here. So I set another entry for a standard lot, and price was moving in my favor. So price came down from where I set my position down here, and I'm up about 160 bucks, right? So as it's, I'm thinking to myself, oh, this is solid. I should close my position right now. But I knew where my take profit was. Now, we're not going to talk about that just yet. We're going to continue on with the psychology behind this. But as it came down here to the zero level, right, price started to retrace. And I was expecting price to retrace to the 382 on the 15 and continue down. But no, it went up a little bit further, 618. It didn't stop there. It kept going a little bit further. Then I saw this. Price stopped at the 382 level on the 1 hour time frame, right? You want to be mindful of these levels on different time frames. Yes, we're looking at 15, but this 382 level is from the hour, right? So if price stops here, you're not really at a loss because you're looking at a 15-minute time frame when price is retracing. This is great to see this. Price just kept wicking up here, going down, wicking, coming back down, coming down, wicking back up, coming down, wicking, coming down. So I knew that, okay, price is either, it's compiling up and it's eventually going to break out to the upside. I already have my stop loss in place. So for me, when I take positions, I just take them and I either let my stop loss get hit or I let my take profit get hit. I don't close my positions. Because if it goes against me, yes, I'm going to take a loss. But if it goes in my favor, it's always going to be 2 to 3 times bigger than my loss. Why close a position for a 1-to-1 risk to reward when you can let the trade play out the way it needs to play out and take 3-to-1 or take 4-to-1 or 2-to-1? Those odds are always going to be greater. They're going to keep you in the game longer, and you're always going to be profitable. Just let your trades play out. Let them play out. I'm telling you, it'll work in your favor, right? So price came up here, and then I saw this small bearish engulfing followed by a larger bullish bearish candlestick followed by another bearish candlestick to the downside. And then from that point, that's when I knew, okay, price is now, sellers are in control. So price came down, and then we saw this. Price came to this 382 level from a 15-minute. You saw all these wicks, right? And price was just stuck right at that level. And then once again, the sellers came back in, another bearish engulfing. Price shot down here. My take profit was right at this level right here, which was a solid point to take profit. I'm going to tell you why. And then I was closed out of my position. And then shortly after that, we had this take place. This large swing to the upside broke above this resistance channel, okay? Now, this was a trade I took using Fibonacci and a bunch of other confluences. As you can see, this top line was a confluence. I was using the channel as confluence, 382 on a 1 hour, 382 and 618 on a 15-minute, right? And then for my take profit, the reason why my take profit was right there at that level was simply because I came to a 1 hour chart, looked at my candlesticks or my line chart, and I saw this. I saw a price consolidated at this area. Price came down and then reversed right here at this area. Price came down, reversed right at that area. We saw a little bit of consolidation, some more price coming down and going back up right at that area. Right? This purple line is where I took my profit. We saw resistance at that area. We saw some resistance here, some more resistance there, right? More resistance here. We go to a 4 hour time frame, right? Still at that purple line. We got resistance, some support, more support, right? Some more support. So we see that, and we can keep going further back to look. But as you can tell, price stops at that area. That's a solid area. So my initial take profit was somewhere down here. But then I was like, wait a second. Let me put my take profit up here somewhere because price could come down to this level and then turn around, right? So let me go ahead and just take my profit here. If I see a retracement, then I'll go ahead and take another position down to my next take profit. But the name of the game is to not be greedy. Aim small, miss small, be a sniper, grow your account big enough where you can take extremely big positions and make big amounts of money off of 10 pips, 20 pips, right? That's the name of the game. So now let's really look at Fibonacci. That was just kind of like an intro to let you guys know how I used it in a real-time, event. Let's go ahead and use Fibonacci. Make sure no one's trying to jump on. All right, cool. All right. And is there any pair specifically anybody wants to look at right now? You got a pair? GU? Oh, how we love GU.
I had to go ahead and get that in first.
Yeah, I feel that. I feel that. It's on the chat. GU or GU. All right, we're gonna work on GU. So let's look at GU. All right.
Hey, Anil, hey, this Robbie, bro. Hey, I'm
What's
gonna
up,
just
man?
have to tap in with you another day, bro. I gotta go because there's some crazy stuff happening at work, bro. So I'm about to leave the call, bro. But I'm gonna just hit you up, bro.
Yeah, that's no problem. I'm recording it too, so I'll drop it in the chat once we wrap up. All right.
All right, bet. Sounds good. Appreciate you, bro.
No doubt, no doubt.
All right, y'all take care. Bye.
Yeah. So looking at this here. All right. So we have GU. All right. So I see a few things right now. So I see this area right here. Right. See that area. And what I see in that area, I see an area of support. I see a lot of wicks. I see a lot of upward movements. I also see some downward movements, right? You see how price is going down. It came down, broke above it, tapped this area. Now it's going to the upside, right? And we also have our weekly levels, our daily levels, and let's make sure that those levels are solid. We come to a weekly, look at the line chart, just to test those areas, see what's happening on a weekly standpoint. And we're looking for large movements from the upside to the downside and from the downside to the upside. Okay, so we see this tap here, which is about 500 pips. We keep looking. So this area here, we also see it as support and resistance. You see a little bit of overlapping there. Okay, and then you see it stop right there. So that's 2003 when the charts first started. So we got some movements on a weekly standpoint, right? Now let's look at it daily. Daily being the magenta lines. So we have, oh, guys, if it looks like the meeting is going to end in 10 minutes, if it does, we are going to sign right back in to the same meeting that we are. We'll wrap it up, in like 20, 30 minutes if it does, once it cuts us out. But I got to upgrade this plan to the pro plan, which I will do so. So looking at the daily, we have some support and resistance right at this lower level. All right, so we have support, got some resistance, some more resistance, some more support, okay? And I like to make these like whole numbers, or at least get them rounded off to like a whole area. So we have 30, 335. So let's see if we put it at 350. What happens? What does that put us? All right, that's a solid area. And then we also have resistance up at the top area. All right, so we have, put that right there. So we have price coming here. We have some resistance, some more resistance, a little bit of overlapping support, some resistance, some more resistance, and a little bit of support. We have that taking place, right? If you look at it from a candlestick perspective, price will break out above it, shoot back down. You see heavy wicks. Price stops at that level. More wicks, a lot of wicks. More wicks. Price stops at that level. So these are solid areas. All right. So now let's look at 4 hour. See what's taking place. So as we can see, we drew that teal line coming down because we saw price action was going down. We know that this area is an area of support, right? Price right now is at an area where it's kind of in like no man's land. Like you can gauge this area right here and some more of these wicks to say that this might be an area of resistance, like right around here. Look at it from a lower time frame and see what's happening, and then we see, price is retracing right now. But I would be very wary of taking a sell position right here simply because it broke out of this downward trend, You know, as you can see, we had a descending triangle, and then now price pretty much broke out of that descending triangle, tapped that area, that descending triangle's resistance line, and now shooting up to the upside. I would wait for some type of retracement. So right now we're looking at the 1 hour, right? I will look for a retracement down to 382, 681 on the 1 hour. And if we're looking at a 4 hour, same thing. All right. So we could just label this 1 hour / 4 hour. .382. The reason why I'm doing this is because I don't like to keep these fibs on the charts. It makes things too messy. So if I leave it like that, it gives me a better gauge of what I'm looking at. So we just leave it right there. And then we kind of want to see if there's any confluences in those areas. So if we look at a 4 hour, do we see anything, you know, that stands out to us? So at that level, if I were to draw a line going across 4 hours, we do see price come up, come down, come up, come down, come up, come down. We see price come up here, come down. So that 382 level, there's a level of confluence. If we date back to, you know, March of 2019, and can we go back even further? Let's see if we can keep going back further to see any type of level that matters. So now we're in October of 2018. We see price, look at this, guys. We see price come up to this level, shoot back down. Comes up to this level, shoots down. Comes down to this level, shoots up. It's shooting down. This is a large movement because, as you can see, price came to that level and it shot down about 400 pips, right? It kind of broke above it, but then it shot back down. How many pips did it break above it? Broke above it 74 pips, but it came down damn near 300 pips, all right? We also saw this. Price came up, came down, seeing a little bit of consolidation. Prices respecting that line. So we're seeing a lot of wicks at that level, right? Even over here, some more wicks. Price came down to it, shot back up. We've seen a bearish engulfing, seen some wicks, some heavy wicks before price going up. So we know that something is happening at that level, right? And that's the 382 level. Now let's look at the 618 level. 618, we also have. Look at that. Price is coming up, stopping right there. Okay, we have some more wicks. I like the 382 level a little bit better because there's a lot more going on at 382. But we do see a lot of stops taking place, as you can see here. Consolidation right there. Price is stopping at that level. So both areas are solid areas of confluence. So that's two indicators that are letting you know to watch those two areas very closely. If price comes down here, price might not come down there. Price might stop here and then shoot up even further, or price may just shoot completely down. We don't know just yet, so we're waiting for some type of movements. Now, we're not trading off of just the 4 hour. You know, we might come down to the 1 hour, see what happens when price comes here. It might consolidate before moving a little bit lower. We come down to the 15-minute to see some type of indication that price is shooting back down. This would be an indication on the 15-minute that price was coming down because we got a bearish engulfing. So we got one bearish engulfing, right? You could have took the entry here, or you could have waited for some type of movement to see what was going to happen. After you waited for the next candle to close, we saw that it was going up. You would have waited a little bit longer, waited, and you could have took the entry right here. Why? Because this is another bearish engulfing. Taking it there, that's a solid, 27 pips, not much, but if it comes down to that 382 level, close your position. You could put your TP right there with a stop loss right above this wick right here, being about 13, 14, 15 pips, right? If it closes you out at 15 pips, big deal. If you're doing a 22, it's $30 that you would have lost, right? To gain $120 on the downside. I'll take that trade any day long, any day. 60 pips, risking 15, that's a 4-to-1 risk to reward, right? A 1-to-4 risk to reward. That's solid. So that's something that we can watch. But we're here to learn about fibs. So I ain't gonna give too much of analysis on this upcoming week, but that's just something for you guys to look at. All right, but let's go ahead and go back in time to use Fib. So I'm just gonna put this at just a random level. That's 2017, 2018. Let's just stop right here. All right. So right now, we are looking at July 2018. We have gone back to the past, right? We're going back to the past. It looks like we're going to drop off. Like I said, guys, if we get cut off, just use the link, jump back on, and we'll keep the party going. All right, so looking at this here, we got a few things. So we have our weekly key level, right, as well as our daily key level. Price is shot down. So when we saw that, what we're looking at is the highest point to the lowest point. We're looking for some type of retracement. We've seen a retracement of 2.236, and then price shot back down, right? So when we seen that shot down, when we seen price shoot down like that, we remove that Fibonacci level, and then we draw from the next highest point to the lowest point at that given point in time. Price might go a little bit lower after retracing, but if it doesn't go to the 236 and it keeps shooting down lower, then keep drawing the fib a little bit lower and a little bit lower. Keep in mind that each one of these candles is 4 hours, so you have ample amount of time to just move your fibs a little bit lower and gauge where price is at. So let's let it run its course. All right, so that was a different movement. So now we have price is going in the upward movement now, right? So price stops at that level. Why did it stop at that level? Well, we haven't gone back far enough to see if that was a resistance area or support area, but we can look here and we see that price is wicking and we see some type of movement there, so we can gauge that. So now that price is moving up, we want to take fibs from the lowest point to this top point. What did price do? It stopped at this 382 level. We saw some wicks. So we can anticipate some type of upward movement. Why? Because we have this bullish engulfing.